My client almost lost £400,000 last week. Why? Because he was about to buy a property for 40% more than he should. And this wasn't just some clueless first-time investor. He'd done his research, he knew the developer, and he thought he had it all figured out. But Dubai's market isn't what it used to be. 2025 isn't the same as 2020. And what worked then doesn't work now. So in this video, I'll break down the 7 core questions you need to ask yourself before investing, and the common mistakes that cost investors thousands of dollars, pounds, and dirhams. By the way, if you want to download this checklist and run through it while you watch, it's in the description. So first things first, how much money do you actually need to invest in Dubai real estate? The reason this question is so important is that I get messages all the time. I've got £200,000. What can I buy? Because social media is full of ads making it seem like you can turn a small investment into a luxury penthouse overnight. But I'm going to be brutally honest with you here. If you're serious about getting a high quality investment in Dubai, you need to be thinking around 1.5 to 2 million dirhams starting price, which is around £320,000 to around £430,000. That's where you start getting access to top tier developers like Imar, Miras, Nikhil. And then of course, if you've got over 5 to 8 million dirhams, that's when you can start looking at more premium waterfront residences, canal front properties, and high-end villa communities. Now, can you buy these for less? Technically, yes. I've seen people buy from unknown developers in Dubai land, and they'll get a 2-bedroom at an extremely good price, but there's no infrastructure surrounding it. And with these cheaper properties, you often have building maintenance problems, cash flow issues. Your property value might actually go down instead of up. So the first step to Dubai real estate is understanding whether you actually have enough to invest. Because if you're working with a smaller budget, you'd actually be better off investing in your home country than buying the cheapest thing you can find in Dubai and hoping for the best. So once you know you have the money, you can start planning. For example, I'm currently working with a client from Zimbabwe who started building out his Dubai nest egg a couple of years ago. He had a very clear goal of building a big portfolio here, and he's slowly moving his wealth from Zimbabwe to Dubai. So the way we're structuring his investments, we're actually setting him and his family up to make around $300,000 to $400,000 per year in rental income, so that his family can reap the benefits from this in the long term and have very valuable assets in a fast-growing city. Now, this didn't happen by accident. We mapped it out. We looked at his long-term vision. We built a strategy that made sense for him. And before you invest a penny, you need to get very clear on why you are investing and what your long-term goals are. There are loads of advantages to investing in Dubai, but trying to save a little bit of money on a tax bill short-term could actually cost you a lot of money in the long run. So first thing, you want to get very clear on what you want in the short, medium, and long term. And if you aren't able to build that yourself, you can speak to people that have already done it, a good tax advisor, a good local investment partner, and so forth. Because that leads us nicely onto the next question. And one of the biggest mistakes I see expats making, how well do you know the Dubai property market? Remember the buyer I mentioned at the beginning of the video? He had money, he had experience, but he still nearly made a massive mistake because he didn't understand how Dubai's property market actually works. And this happens all the time. People come to Dubai thinking they understand how property works because they bought properties in the UK, Europe, US, and they assume Dubai works the same way. But Dubai is a different kettle of fish. And if you don't understand how developers price their projects or how the payment plan structures work, you're already at a disadvantage. So ask yourself this question and try to be honest. How well do you actually know the Dubai real estate market? And once you have the answer, I've got another question for you. Where do you live? I was recently working with a football player from London who was buying a property in Dubai. He was using a really high-end bank to send his payments and trusted they would do a good job for him. But 6 months later, he realized the bank had taken 3% cut on every transaction, which might not sound much, but trust me, on an expensive property it is. And it ended up costing him around £25,000 in fees he didn't have to pay. So before you start mindlessly transferring money to Dubai in the hope of saving money on tax, you need to consider how your location affects your investment, because it's not just about buying the property. You have to consider how you're going to get your money over here and how you're going to move it. And you need to understand how the bank will transfer the money and what rates they will charge. Because when you're withdrawing, $10 on holiday, it's not going to be a problem. But when you are sending millions of dollars in payments, that can really screw you over. And let's say you want to invest in Dubai and you've got 400k to work with. Now, if you're a UK resident and you're from abroad, you could put down 140k and get a low document mortgage to cover the other 65%. Banks don't need much. They just need proof that you've got a salary or a business that's been operating for a couple of years. But if you live in Dubai and you want to get a mortgage as a resident, it's a different game. You need between 3 and 6 months of salary proof from a Dubai-based employer, and also the employer needs to have their business set up and running for the past 2 years. And the same if you're self-employed, your business must have been running for the last 2 years. Banks will go through your full financial history and the companies before giving you anything. And this is where a lot of people go wrong. They assume that just because they have a golden visa, they automatically qualify for financing. They don't. Just because you've got a golden visa doesn't mean you're a resident and you can get a residency mortgage. Dubai banks don't just look at your visa because they look at income stability. So depending on whether you're a resident or an overseas investor, finance process can either be really straightforward or complicated and a pain in the arse. And if you don't understand how this works, before you start looking at properties, you could waste months chasing a mortgage you'll never qualify for. That's why we have a team of experts who can help you with this exact scenario. Once you manage to get your financing sorted, the next big question is, where are you buying? This really comes down to what type of investor you are. If you want something safe and steady, you should probably look more at master communities developed by the big names, Emaar, Miras, Nakheel, Shoba. Why? But if you're feeling a bit more optimistic, there are some emerging waterfront islands which currently have not much infrastructure, but in a few years that will all change. So they could blow up in price or they could just slowly start to take off. Now, like I said before, I've seen people buy cheap 2-bedrooms in Dubai land thinking they've found a bargain, but there's no real infrastructure around, so the value doesn't grow, and renting it out can be a struggle. So before you invest, you need to ask yourself, are you a long-term security or high-risk, high-reward investor? Now, I don't believe there are really high risks in Dubai, but you need to just be asking yourself these questions. And the next question you need to ask yourself, are you actually planning to move to Dubai yourself, or are you looking at this purely from an investment abroad? Because this changes everything about how you go about things. Firstly, buying a property worth 2 million dirhams or more could qualify you for a golden visa, which means long-term residency in the UAE. And with that, you can sponsor your spouse and kids as long as they're under 18. If they're older, there are other options like putting them into schooling or getting them set up in some sort of business structure within your company. But moving to Dubai isn't just about getting a visa. I've seen people rush into buying only to realize that later down the line, the area doesn't suit their daily life. And that's why I always tell clients to come to Dubai and spend some time here first. Drive around the different communities, spend some time in the different areas, get a feel for what life would actually be like, check how close the nearest schools are, GEMS, Swiss International, Australian International, or whatever fits your needs, and see what's being developed nearby. Some areas look great now, but if there's major construction planned, it could impact your experience. At the end of the day, Dubai has some of the best master plan communities in the world, but only if you choose the right one for your lifestyle. Before you think about investing in Dubai, there's one more question you need to answer. What type of property should you actually buy? Because even if you nail all the fundamentals we just talked about, choosing the wrong property type could still cost you thousands. So check out this video next, where I'll show you exactly what type of property you should be buying in Dubai in 2025.